I am pleased to bring in Michael Lee, strategy founder, Michael Lee, who joins us now. Okay, are the markets overreacting to the one data print that we got this morning?
No, because this is the first big miss on payrolls we've had in quite some time, and behind the surface, this payrolls number is not that good. The birth death adjustment was 353,000. So the Bureau of Labor Statistics throws all these adjustments for seasonality and God only knows into these numbers to come up with this number. And so I don't think the labor market is anywhere near as strong as advertised. That being said, we are certainly not falling off some sort of cliff, and the unemployment rate's not going to go to 8%. But this is a materially weaker number than what we've seen, far below estimates. And it's going to get revised twice, so we'll see. But the last couple months were both revised lower, which has been an ongoing trend for the last 18 months. So I think if you're hoping for a rate cut, this was definitely a step in the right direction.
Okay, I hear that. Meantime, you've got Apple and big tech driving part of this rally as well. Apple beating low expectations, but also announcing that huge $110 billion buyback. Still, though, saying that iPhone sales were down 10%. So maybe this is a good report for Apple right now, but do you still feel they're working out the problems there, Mike?
Yeah, well, look, they're going to return to revenue growth in the back half of this year. The services division, so you have this installed base where everybody and their brother and their sister has an iPhone. It's massive installed base worldwide, needs to buy things in the iStore, iTunes, is paying for all sorts of different apps. Apple's taking a piece of that, and that services business grew at over 14%, beating expectations there. The margins in that business are astronomical. Apple's in very, very good shape. I think with artificial intelligence around the corner, it'll be interesting to see if that spurs a new upgrade cycle as new phones start coming out. But look, Apple's in a category of its own. I'd say it's a mistake to bet against them. And this $110 billion buyback, that's a tax-free return of capital to shareholders because, of course, dividends are taxed at 20% or 23 and 23.2 if you're in the higher tax brackets. So I think this is a good sign. I think all the tech earnings were pretty spectacular.
So, Michael, you're one of these guys who still thinks NVIDIA is a good buy at these levels. So it makes me interested in what else you think hasn't hit its top yet. Give us some of your picks.
Oh, well, look, this AI trade is not even close to over. We're still in the beginning stages. One name that I like is Facebook or Meta, and I think the street completely got it wrong on their earnings. When they look at the $40 billion investment Facebook is going to make in artificial intelligence. Okay, AI as we know it now is about data mining and monetizing that data that you just mined. What does Facebook do? It takes your data and it sells it to advertisers. So for them to spend this much money on artificial intelligence makes sense. I think it's gonna pay off huge dividends in the long run. I like them. I like AMD, and then NVIDIA. We're still a few weeks away from their earnings, but based on what we heard out of Google in the cloud, what we heard out of Amazon in the cloud, what we heard out of Microsoft in the cloud, you can't be making these investments in artificial intelligence and stepping up your data center game without chips from NVIDIA. So I think we're going to get another astronomical quarter for them. Amazing. I think there's a long way to go before this upgrade cycle is done.
Michael, thank you so much. Really appreciate it.